Consumer Insurance Disclosure and Representations Bill, Lords.
Perhaps before we begin, I would like to point out that this is an unusual procedure. This is a second reading debate, not a committee hearing, and that means that no member may speak more than once. The Minister moving the substantive motion, however, does have the right of reply. I call the Minister to move the motion.
Thank you very much, Mr. Iain. It's a pleasure to serve under your chairmanship this afternoon. I'm pleased to be able to discuss this bill today, which, in sweeping away an obsolete law, provides not only clarity and protection for consumers, but also benefits insurers. We are reforming the Marine Insurance Act 1906, which, despite its title, applies to all forms of insurance. The result will ensure that consumers are not unfairly penalised for reasonable failures to disclose or actively represent information when purchasing insurance. Now, Clause 2 of the bill changes the current legal requirement that consumers must volunteer information to one that insurers ask clear and specific questions. The bill aligns the law with both industry practice and the approach of regulators. As a result, it is widely supported. We've taken a high-level approach, updating the principles set out in law to bring these in line with good practice, rather than attempting to set out prescriptive detail. This should help avoid the law becoming outdated again as market practice develops. After considerable scrutiny in the other place, we have received this bill with only one small amendment. It now reflects in Clause 3 concerns about the need for consumers to understand that their duties of disclosure are the same as when they first take out insurance. This is because in law, a renewal is a new contract. I intend to give further detail on the bill's provisions, but I'd like to give honourable members some background on why change in legislation is necessary. When the UK market for consumer insurance began to develop in the middle of the last century, it became apparent that the existing law imposed an unfair burden on consumers. Despite regular calls for change, the requirement of the Marine Insurance Act that consumers must volunteer all information which might influence the judgment of a prudent insurer has remained in statute for well over a century. If the industry had followed a strict legal interpretation of the consumer's duty, there's no doubt we'd have seen significantly more insurance claims rejected on clearly unreasonable grounds. Take, for example, a consumer purchasing a critical illness policy who does not inform the insurer that he has mentioned recurring pins and needles during a visit to the doctor. To many of us, this symptom may seem irrelevant, may have been mentioned only in passing and nothing more thought of it. We might view his failure to mention it to his insurer as being completely understandable and reasonable. But what happens if our consumer develops prostate cancer and claims on his medical insurance, hoping it will cover the financial distress caused by being unable to work during treatment? As it stands, the insurer may legally refuse to pay his claim simply on the grounds that the pins and needles were not mentioned on entering into the contract. This symptom can in fact be an indication of multiple sclerosis, the thing which a prudent insurer, when agreeing to provide critical illness cover, would have taken into account. It's not reasonable to expect our consumer to have the detailed medical knowledge and understanding of underwriting practices needed to recognise he should disclose this symptom. Yet only this disclosure meets the current legal requirement that he provide the information which would, quotes again, influence the judgment of the prudent insurer. Now, this is so clearly unreasonable that refusing on claims on these grounds is neither industry practice, nor is it treated as acceptable under FSA rules or in judgments taken by FOS. As a result, a complex and confusing array of rules and regulations has emerged to compensate for the outdated legislation. In some cases, the different legal and regulatory positions cause problems for both industry and consumers. At the moment, the Ombudsman Service receives around 1,000 complaints a year about non-disclosure and misrepresentation. Around half of the insurers' decisions are upheld, a figure that we'd expect to be much higher if there were sufficient clarity around the rules. It indicates that insurers find it difficult to locate and interpret relevant rules. The bill aims to clear up the discrepancy between law and regulation. Now, the bill before us today is a consequence of the hard work of the Law Commission. I'm very grateful for the work that they have done. And it implements recommendations of the Law Commission and the Scottish Law Commission in their 2009 joint report on pre-contract disclosure and misrepresentation in consumer insurance contracts. It is also a result of their extensive consultation and close discussion with insurance, industry, consumer groups and regulators. Because of that work, we've had draft legislation which has been widely supported. That draft legislation has flowed into this very limited and targeted bill, which applies only to consumer insurance contracts and pre-contractual disclosure. It does not apply to insurance contracts solely or mainly covering business, including micro-business. The Law Commission's review of insurance contract law, which will affect such interests, is still ongoing. So we turn to the central provisions of this bill. Clause 2 replaces the consumer's existing duty to volunteer information, the duty to take reasonable care to answer the insurer's questions fully and honestly. It is therefore no longer the responsibility of the consumer to volunteer information. Instead, the insurer must seek the information by asking a clear and specific question. As the bill is principles-based, it does not attempt to guide what questions insurers should ask. Now, if a consumer does make a misrepresentation, it is classified as one of three types: reasonable, careless, or deliberate and reckless. Now, if the misrepresentation was reasonable, then within the terms of Clause 3, the insurer must pay the claim. If the misrepresentation was deliberate or reckless, the insurer may treat the policy as if it never existed and may decline all claims. It's also entitled to keep all premiums paid. Finally, if the misrepresentation was careless, the insurer has a proportionate remedy based on what they would have done had the consumer answered the question accurately, and is set out in Schedule 1 of the bill. For example, the insurer may have charged a higher premium because if the representation may be made properly, and therefore they only must pay a pro rata portion of the claim. Now, the FOS has been applying these proportionate remedies for some time. However, under current law, the penalties to the consumer are harsh. A failure to disclose any information a prudent insurer would take into account when writing a policy means currently it would be void. So we go back to our consumer with pins and needles, who honestly and did not reasonably know that they should have disclosed this to the insurer. In the past, they wouldn't have expected their claim to be made, despite the fact, because they hadn't made the disclosure, even though it wasn't linked to prostate cancer, because the contract would have been treated as if it never existed. So what we now have is a proportionate regime to make sure that consumers, where they make a misrepresentation, their cases are looked at very carefully in line with best practice, rather than simply having their claim voided. Now, there has, Mr. Amess, been extensive consultation, the results of which have been reflected in the bill where possible and relevant. And I'm pleased to say that the broad consensus and support for the changes comes from consumer groups, including which British Heart Foundation, Consumer Focus, Macmillan, and Age UK, as well as industry and the regulators. So this bill before us today is one that's gained widespread consent. I hope it gains this consent of this committee.
Yeah. The question is that the committee recommends that the Commons Insurance Disclosure and Representations Bill laws ought to be read a second time. Chris Leslie.
Well, thank you very much, Mr. Amess, and it's a pleasure, as ever, to serve under your chairmanship. Honourable members may well think, well, another committee, another day, is this a statutory instrument? Here we go again. But in fact, this is a very rare procedure. We are actually having a second reading debate of a piece of primary legislation, but under a rather obscure provision of House Standing Orders, where the Law Commission have been party to the drafting and the recommendations in bringing this bill forward. In my view, rather bizarrely, the bill has its second reading debate not on the floor of the House, where I presumed all second reading debates for primary legislation ought to take place, but upstairs in a committee. Now, I can't complain too much about this because the previous government did indeed take advantage sometimes of those provisions, but notwithstanding that minor issue of consistency, I would like to take this opportunity, Mr. Amess, to voice my disquiet generally that any piece of primary legislation should have a second reading debate in a committee. It may well be that there is all-party consensus on many of the provisions within this, but if it's primary legislation, my own view is that it ought to have its debate properly on the floor of the House of Commons, as my honourable friend beside me, who is clearly keen to be written into the Hansard record today, has said it's not as though there's an awful lot going on the floor of the House anyway. So my view has been stated. I think we should have been, well, the honourable gentleman makes my point. Having said all that, this bill is broadly to be welcomed. It does increase clarity with the relationships between insurer and consumer, and ensures that what is now accepted widely as standard practice, in other words, that insurance companies ask questions and the consumer provides the answers, is properly legislated for. A lack of clarity results in a lack of faith from each party to those contracts. It's important that this trust is strengthened in order to give both the consumer and those underwriting an insurable risk a fair deal. There are plenty of problems in the insurance industry that are there for all to see, whether it's inflated premiums, disparities between demographics, between neighbourhoods, and of course harsh remedies for human error. But at least this bill will go some distance to preventing significant punishments for often minor mistakes, as the Minister has set out. All too often, consumers have claims denied or overly unsympathetic implications placed upon them as a result of the blurred boundaries of what they should and what they should not disclose in pre-contractual exchanges of information. And so the bill will help to bring about a new relationship. It's certainly worth congratulating the hard work of the Law Commission in diagnosing the problems and finding solutions, and they've found a consensus from both the industry and consumers. And it's also, Mr. Amess, worth noting that this is a bill that's been brought forward following the recommendations from the Law Commission report published in 2009, which of course makes a world of difference. It is an important report from the Law Commission. They identified a number of recurring issues, as the Minister has indicated. First, that duty of disclosure by consumers volunteering information means that consumers are often unaware of what it is they need to disclose. So the Commission rightly notes that this can sometimes act as a trap in which one enters into a policy only to find that the individual has not been given the necessary information, not been giving the necessary information to the insurance company, resulting in significant alterations or even the cancellation of the policy. So the bill ensures that the insurer has to ask the relevant questions, and it means that the consumer gives the relevant answers. It improves simplicity and clarity, and therefore is to be welcomed. But the Law Commission also identified that policyholders may be denied claims when they have acted honestly and reasonably, and therefore we welcome the set of guidelines that the bill brings forward surrounding difficult contractual consequences depending on the nature of the misrepresentation of information. The third key problem found in the Law Commission report was this remedy of misrepresentations and non-disclosure are often overly harsh, and the current system in the current system, the insurer has the ability to simply deny all payments, including premium payments, even if an honest mistake was made by the customer. That's obviously wrong, and it's welcome that the bill will ensure that for non-deliberate mistakes, the insurer will not unduly punish those customers. So in many ways, I think we have cross-party consensus on the positive responses, and certainly from the industry and consumer groups as well, to these particular arrangements, and the bill is therefore welcome. However, the bill does allow us an opportunity to take stock of some of the wider issues facing consumers of insurance products. While the insurance industry has not been as causal in recent financial crises as the banking sector, and indeed it's earned a stronger reputation as a result, there are areas where we feel improvements in public policy relating to consumer insurance need to be made, and we want to urge the government to consider those. Insurance is not a luxury in many cases. For instance, it's a legal necessity for car drivers, and getting insurance and thinking ahead is the responsible thing to do. But too often there are considerable barriers that dissuade or prevent people from doing the right thing. For example, the bill does nothing for the families who are unable to insure their house against flood damage, because insurers will refuse a policy, and it does nothing for those discriminated against, perhaps the diligent teenage driver who cannot afford to insure their car because of overly high premiums. While the issue of consumer insurance is highlighted, it does seem to us a good time to ask the government what they're doing on some of those matters in order to make the industry fairer at a time when people's living standards are being squeezed so significantly. The Transport Select Committee recently published a report into the costs of motor insurance with a subsequent set of reports, and they set out a series of steps that they recommended the government should take in order to make the system fairer, particularly in relation to the question of referral fees, which have been in the spotlight in recent months. Law firms paying a fee in exchange for the contact details of someone who might be interested in legal services does have shades of ambulance chasing in many ways. The steps that the government have taken to move to ban legal referral fees in the Legal Services Bill will no doubt aid the trust between consumer and insurer, but there is still a lack of any significant progress in ensuring that the insurance companies themselves are restrained from passing on contact details to third parties or other non-regulated organisations such as the claims management companies who've sprung up as middlemen in recent years. The reforms from the government are broadly restricted to referral fees paid by solicitors, but insurers are still selling their customer details to those other related third parties, and the Transport Select Committee recommends that the government prioritise the implementation of new regulations by the FSA in order to prohibit insurers from receiving referral fees from any other party. So I'd be grateful if the Minister can clarify where the government stands currently on this aspect of consumer insurance policy. Have the government considered those recommendations of the Transport Select Committee, and does he believe that there is indeed a need for further increases, at least of transparency on some of those referral fee arrangements? The Transport Committee also highlighted the need for insurance companies to honour the spirit as well as the letter of the law in respect of data protection. And while the banning of referral fees is obviously a significant step towards that aim, there are still those testing the boundaries of the letter of the law. The Transport Select Committee states that, along with the Justice Committee incidentally, that they want to see increased penalties for breaking of data protection laws. Can the Minister say whether he's looked into the potential for increased penalties in respect of breaches of data protection arrangements by those in the industry? Some of the calling practices, the texting practices are clear breaches of data protection policies, and I'd welcome if the government could find a way of building on the work done by Law Society, the ABI and others to try and stamp out some of those arrangements. Turning to the issues for the industry in relation to regulation, I wonder if the Minister can take the opportunity to update the Committee on the progress of the Solvency II regulations, which clearly relate to consumer insurance questions. Now, there are sound reasons for reforming the capital arrangements within insurance regulation, but we, like many in the industry, have concerns over the potential impact, not just on the companies, but on consumers as well. No one would suggest, after the lessons from the global financial crisis, that we shouldn't have minimum capital requirements and solvency capital arrangements, but we have to reduce any unnecessary risks to the industry and protect consumers against potential bailouts such as AIG in America, where the companies didn't hold the required capital against the potential risk to which they were exposed. So can the Minister say what the government is doing to ensure that there are no unintended or unduly adverse consequences of overburdensome requirements when it comes to Solvency II? And can the Minister ensure that there won't be any significant negative changes in the availability and the affordability of insurance products as a result of the Solvency II arrangements as they currently stand? We have to obviously all work together across the parties to ensure that hard-pressed customers aren't saddled with the lion's shares of these particular costs. Yeah. We could talk at further length about the impact of the Prime Minister's phantom veto on the capabilities of the UK around the negotiating table, particularly when it comes to Solvency II, but I fear that might be straying slightly wide of the topic ahead of us. But I do think it's important, given the representations that are being made by a very concerned and worried insurance sector when it comes to our ability to shape the Solvency II arrangements, what approach and what expectations the Minister has for some positive outcomes, especially if we do need to engage as constructively as we can with the European Commission on many of these issues. So the bill before us today is obviously to be welcomed and broadly uncontroversial, but we look forward very much to the further stages where we can talk about some of the other consumer insurance issues on the table. We, for our part, don't feel that enough is being done to help hard-pressed families when it comes to many of the costs that affect them, and insurance issues are certainly some of those questions that can crop up. We think that the government needs to do more to stand up for individuals and families who have to bear many of these costs, and so the consumer insurance questions are those set of issues that are at the forefront of the minds of many up and down the country. I hope the Minister will respond on some specific points on referral fees and Solvency II as well, and put the record straight on the government's position on those. But broadly speaking, we welcome the Law Commission's work on this bill.
John Hill.
Thank you, Mr. President. I wanted to delay the committee. Well, yes, it is a committee. A couple of questions for the Minister, really. Firstly, I'm very surprised at this idea of having a committee that deals with the second reading. Obviously, the main concern is people outside Parliament, and that they are aware that these changes are going on and have an opportunity to lobby the system to make sure. So I asked the Minister, the first question is are we doing in government any more to try and make sure people know what's going on than would normally be the case with the passing of a bill? And the second one odd thing I've noticed in shopping centres is solicitors competing to offer a sort of cashback arrangement where they pay one firm offers £200 for anyone who puts a claim to them, another one offers £400. And one wonders, given that things have changed over the years from situations where solicitors couldn't advertise to now where they offer cashback, whether the government's monitoring that as to whether that actually does in the end add to the cost of insurance, which is quite a serious cost, particularly for young drivers.
Harriett.
Thank you very much. I had not realised that I would not only have the pleasure of serving under your chairmanship, but also the opportunity to raise in front of a Treasury Minister this afternoon an issue which is actually very burning in front of my constituents. So perhaps colleagues could indulge me just for 2 minutes while I raise a couple of points. The Minister will be well aware that the Statement of Principles for flood insurance is expiring in July 2013, and that the insurance industry is currently pressing the Treasury to subsidise insurance more widely for areas which are prone to floods. And my constituency in West Worcestershire, of course, was very badly hit by floods in 2007. So this is a pressing concern to many of my constituents at the moment. And therefore, I do want to take this brief opportunity to ask the Minister today, as this particular piece of legislation goes through Parliament, would it be possible to consider putting into this legislation something on a statutory footing that would require the insurance industry, when offering household insurance, to include as a matter of course in that legislation, in that policy, the coverage for flood insurance? It would be a useful statutory vehicle to use during the process of negotiations with the insurance industry about providing flood insurance more widely across the country once the Statement of Principles expires in 2013. Thank you, Mr. Evans.
Minister.
Thank you very much, Mr. Evans. This has been a helpful and helpfully short debate on this. I'm sorry the Honourable Member seems so reluctant to embrace the novelty of this process. This is a bill, I suspect, Mr. Amess, that wouldn't find time on the floor of the House due to the pressure on the government's legislative programme, both in this place and the other place. It is useful where a bill has been quite widely discussed, and it's a product of the Law Commission process to use this process. And I would say, in answer to my honourable friend member for Birmingham, Yardley, that this is a product of quite extensive consultation, and in a way, because of the novelty of the process, it needs to be more consultation rather than less. The fact that this has been endorsed by so many consumer groups, representing a broad cross-section of stakeholders and the industry, is a sign that there's been a collaborative approach to this bill, which I think is welcome. The Treasury, despite the almost imperial reach it had under the previous regime, doesn't regulate solicitors, but we'll make sure that my honourable friends in the Ministry of Justice take note of his comments about the way in which solicitors are advertising trade in supermarkets offering cashback deals. I think it's good that solicitors generally are able to advertise, but clearly someone has to pick up the bill for their incentives somewhere along the line. Now, the honourable member for Nottingham East and my friend member for West Worcestershire raised the issue of the Statement of Principles on flooding. We are working very closely with industry to consider what the appropriate options are for targeted support for those at flood risk, and particularly those on facing flood risk and on lower incomes. That is work that's been principally led by ministerial colleagues at DEFRA, but clearly the Treasury takes a close interest in this. Now, my own friend, member for West Worcestershire, is normally, I think, a champion of deregulation and reducing the burdens of business, so I take note of her suggestion that we should impose a duty on insurers to offer this insurance, but I understand the point that she is is making. And I think one of the challenges is to ensure that flood insurance is available. I think I'm right in saying that the UK is one of those few markets where flood insurance is widely available, and in many European member states, other European states, the responsibility rests with the state. So it would be good to see the market function properly and effectively. But and I think that my old friend and a member for Newbury, who's taking particular interest in DEFRA, will be aware, I'm sure, of the concerns of those whose constituencies are most affected by flood risk. Now, the Honourable Member for Nottingham East raised the issue of the cost of car insurance. It is something that concerns me. I do get a number of letters from Members of Parliament about this. This is not a new phenomenon, but it's one where we're taking actions. He referred to the Transport Select Committee's recommendations on claims management companies. I just say, actually, we are going beyond their recommendations. And I think that we're going to also ban fees in personal injury cases as well, which I think is a welcome drive, because I think some of these referral fees and some of the costs are driving up the cost of insurance, and of course it is the diligent teenage driver who is paying those costs, and of course the costs are spread across the whole of the insured population, but of course it's harder for those who are in higher risk groups and more expensive for them. We're also implementing the Jackson proposals on the costs of civil justice, which again I think will help, and we're giving insurers access to DVLA data to tackle fraud, which again is an important driver of motor insurance costs. So we do take these matters very seriously, and of course, as well as those remedies I've outlined today, the OFT themselves are looking at the cost of motor insurance too. So there is work going on both in government and in government agencies to tackle this important issue. I have to say, on the topic of texting, I'm not entirely sure, Mr. Amess, whether a ban will tackle this problem. I've had cold calls and texts about making a claim to PPI insurance. Now, I've never had a PPI policy, and so whilst the ban may be attractive, I don't think any of us should be under any misapprehension this will stop the practice of cold calling and texting to get us to make claims. It is a widespread practice that's out there already. On Solvency II, we are making good progress on this. The government has worked very closely with the insurance industry. I've met with the CEOs of our leading insurance companies and Lloyds to talk about this, and we work very closely with the FSA and the European Commission to get the right outcome on this. And I think we are making good progress. And actually, in a rare moment of cross-party bonhomie, can I also commend the work of Peter Skinner, one of the Labour MEPs, who has taken a particular interest in this and has been very effective in working with the industry to get the right outcome of this. So it is a genuinely cross-party effort to get to the right outcome, because of course the additional costs that could be imposed through Solvency II could be borne by customers through either higher premiums or lack of access to insurance, or through lower annuity rates, depending on the outcome of the matching premium. We're making good progress on this. It is absolutely vital, as John Member said, to ensure that there's a good solvency regime in place for insurers to help ensure that insurers can meet the needs of those who make claims. So I think we are getting the balance right on this, but it is a complex piece of legislation. So with responding to those broader, so on second reading points, Mr. Amess, and the novelty of this committee and the freedom we have to roam rather wider than we would if this was done merely by statutory instrument, I do hope that members on all sides of the House can support the second reading of this bill.
The question is that the committee recommends that the Consumer Insurance Disclosure and Representation Bill laws ought to be read a second time. As many as are of that opinion say aye. Aye. To the contrary, no. I think the ayes have it. The ayes have it. Order. Order.